The real estate industry is a huge beast, and how it goes typically, so goes the U.S. economy. And Fannie Mae has predicted dark days ahead. In this video, you'll learn about lenders, home builders, home buyers, home sellers, what's happening now and what's expected in the near future. Due to incredible pricing spikes in homes and mortgage rates, housing is clearly on the downtrend and has been for quite a while now. On August 23rd of 22, a group of Fannie Mae researchers projected that home sales had declined 16.2%, another half-point downward revision from July's prediction of 15.6%. Of course, that's from last year, July. Fannie Mae buys and guarantees loans from banks so they can make more loans and serve more buyers. They also project mortgage originations activity to tank to $2.5 trillion, down from $4.5 trillion in 2021, and down even further in 23 to $2.3 trillion. Mortgage lenders, who had been riding high on a huge wave of loans needed to fund the housing frenzy, seemed to be the first ones to take the substantial hit. The lender layoffs, including shutdowns, have come fast and furious. Loan Depot comes to mind. And I have to think this is just the beginning. According to the MBA, that's the Mortgage Bankers Association, only 57% of companies were profitable in the second quarter of 22. Keep in mind what this major decline in production does to the gross domestic product. The bright spot? A tough market clears out ineffective businesses. On the other side of this, we'll likely have well-tuned and effective lenders giving great service. Another industry taking a hit is home builders. Due to inflation worries and supply chain issues, home builder confidence dropped to a 2-year low in July. A really surprising fact, according to the Home Builder Association, is the only worst drop in builder confidence was in April of 2020, when the feds propped up the economy because of the emerging COVID crisis. I mean, that's saying something loud and clear. New homes sold at an annual pace of about 600,000 in June, the slowest pace since April of 2020. New home sales are projected to fall 18% from last year. New home starts fell 2%, an expected plunge as builders battle the rising interest rates, cooling buyer demand. Building material costs are up 19% year over year, and with the worst inflation in 40 years chipping away at home buyers' ability to purchase, builders are facing some very stiff headwinds. Buyers are canceling orders and pulling themselves out of wait lists. Builders are throwing out incentives like spaghetti against the wall to see what'll work to bring buyers back. In June, there was a 31% decline in sales in new home developments compared to the same time last year, and even further in July. Starting in May, building permit applications dropped off. This is a clear precursor to the continued housing shortages. 87% of builders are now planning to slow their pace of construction to make sure they can sell what they build before starting new projects. Makes total sense. D.R. Horton and Pulte Homes both reported cancellations at a much higher rate, with Lennar Homes, Lennar, bucking that trend with a 4% increase, but just today, their stock was regraded to neutral from buy. So what's going on? Some home builders are now romancing buyers with incentives, some offering to buy down mortgage rates or shouldering some of the closing costs buyers normally carry. Some offer upgrades to fancier finishes and ending some premiums for corner lots and lots with views. 20% have cut prices, which is a last resort for builders and the recent home buyers in a given neighborhood. I mean, imagine you buy a $600,000 house, a Plan B, and a builder builds another Plan B down the street and they cut the price by $20,000. You know, there goes your equity. Don't want that. Some builders are retooling projects to focus on more affordable housing, featuring less square footage, condos, townhomes, and less expensive finishes to get costs down. The bright spot? For home buyers, this is the first time in a while you can get a break on your new home pricing. Take advantage of it. Let's talk about home buyers. For borrowing home buyers that are well prepared, as far as mortgage rates go, it's going to be up and down. The rates keep touching 6% and they dip back down. They just did that today. If you're super sensitive to rate changes, this may not be a good market for you. If you've done the math relative to your finances and 6% is a doable number, then you're in luck. How's that again? If you want to buy a new home, like I said earlier, you have a great chance to get rate buydowns, closing costs paid, or significant builder upgrades. The simple secret to getting more of what you want is to make it clear you've got your walking shoes on. If you're more into an existing home place, you don't have to build, you just move into it. The same rules apply, except here you have an excellent chance of negotiating a much lower sales price. Don't be afraid to start low and work your way to an acceptable deal. I do have one priceless tip for you. This is worth the price of admission. Never, never, never be the one who quits in a negotiation. Take that last shot at a counter, even if you're convinced they'll never accept it. I can't tell you how many times a buyer and I have won a crazy good deal following the simple rule, never, never, never quit in a negotiation. The bright spot, if you're ready for it, now is a great time to get a deal. Not long ago, people were crying about never finding a house. Now you'll have plenty to choose from. Let's talk about home sellers. I'm afraid the news isn't quite so good if you want to sell. The heydays of selling for whatever you want, gone. The idea of selling as is, gone. If you're getting ready to list and you have a number in mind, take the time to look at what's really going on in your market. If you're getting your pricing ideas from 3, 2, or even 1 month ago, look again at what's happening right now. Unlike a year ago, the condition of your home matters again. The location matters, the updating, it matters, and most of all, the price matters. 40% of homes are selling at full list price, that's true. But what that means is 60% of agents and sellers are pricing too high. The days of let's list high and test the market, gone. You might not like what you're hearing, but you're gonna find out when you get out there and try this that it's probably true in your neighborhood too. The other day I had a home seller tell me I refuse to sell my house for less than X number of dollars because I can wait. I resisted the urge to respond with, I'm glad to hear you can wait because you're not moving. Before you collapse in despair, I'm going to remind you that you're likely 10, 20, 30, 40% higher than you expected in 2020. So be willing to take your 30% win and call it a day, a very profitable day. The bright spot, I just told you, you've got profit built in. If you like this video, share it with friends to help me spread the word, and subscribe so you know when the next one drops. As always, thanks so much for watching. Talk to you soon.